Right, assalamu alaikum everybody. Why, my God, I wish I could speak. Hope you guys are doing well. If you guys have made it, this is day two. Yes, you heard that right, day two of the free course. And so today we're going to be going over some day trading basics, pretty much giving a general overview of what I will be covering in the course in more detail as the days go on. But these are just some basics that you need to understand with day trading of stuff that you really need to master and get really good at so you can make money with day trading. And then I'm going to go over to TradingView and, we'll go over about some, just going with TradingView because a lot of you guys will most likely be using that for analyzing your charts. And so I want you guys to, at least if you haven't ever day traded before, if you don't have an account open, nothing like that, I want you guys to get at least a little bit familiar with it. That way you can actually start to practice day trading a little bit as the course goes on. Right. So with that being said, guys, let's get started. Hope you guys enjoy this sort of content. If you guys do, like the video, comment down below, subscribe to the channel, and let's get into it. So day trading basics, as I said before. So the first day trading basic, there are three things that you're going to need, and we'll be going over all of them today. Again, a general overview, and then more in depth later on. Technical analysis is one of those things. Technical analysis, as the name says, it's pretty much analyzing the charts, right? It's literally going to be a bunch of stuff such as indicators, price action, market structure, whatever it might be. Those things may not mean anything to you right now, but it's okay. I will go over them again in depth later on. And so this is pretty much going to help you understand what the market is doing and whether or not you should be in the trade or not, or in a trade or not, right? So it's going to help you understand whether or not, is the market currently doing stuff that could help you make money or not? Are market conditions in your favor? If they are, then you're looking for your entry pattern and to take a trade. And if they're not, then you're just sitting on your hands. A lot of trading, guys, is not fun. A lot of trading is very, very boring. Okay. To put this into perspective, guys, today I traded. I made $216, mashallah, in a matter of, I want to say 10 minutes, give or take, right? But to make $216 in 10 minutes, I had to sit on the charts for an hour-ish, maybe 40 minutes, right? So 40 minutes with doing nothing before I got my entry. And then in 10 minutes, I made $216. And now I've been sitting on the charts again for the next hour and 30 minutes now, and nothing's happened, right? So technically, yes, I made $216 in 10 minutes, but for 2.5 hours of trading, I've done nothing. That's what you have to understand. Or 2 hours and 20 minutes, I should say, I've done nothing, right? So technical analysis is literally going to tell you whether you're going to be sitting on your hands or whether you will be doing something. And here's a picture of technical analysis. Again, like I said, this isn't going to mean anything to you right now, or maybe honestly, it might. Chances are some of you guys actually do have experience and are watching this video right now for this free course. And so you'll know that this is a trend line. You'll know that these are lower highs and lower lows. You'll know support is being broken like it says over here. But this is an example of technical analysis, right? So this is telling you the guy who would trade this way is seeing that price is going lower and lower and lower. We are in a downtrend. He's seeing that this is a level in the market that was broken and we came back to that level and now we're getting rejection. So he's entering the trade off that. This is a very, very simple and easy trading pattern, guys. And I'm going to explain this more in depth. I used to trade this way when I was a beginner, and I actually did make money. This is the first strategy I ever traded and made money with. So I'll explain this in depth as the trade goes on, but this is an example of technical analysis. And again, over this entire point over here, this guy is marking out everything, right? But he's not doing anything. He's just staring and waiting at the chart for it to play out, marking out what the market is doing, right? What is the pair that I'm trading currently doing using technical analysis, such as market structure, such as drawings like trend lines, support and resistance, key levers, market structure, and then eventually this is where he would take the trade from. All right. Next, risk management. This is one of the most important things about with trading, involved in trading. If you're involved in, God, I wish I could speak sometimes, guys, but you'll notice I say important for this very reason. It's very important. Risk management, like the word says, is managing your risk properly. All right. So pretty much, guys, it's stuff like how many trades are you going to take? As a beginner, I recommend only taking 1 to 2 trades per day. Honestly, one trade. How many asset classes are you going to trade? Are you going to trade forex? Are you going to trade stocks, futures? What are you going to trade? Again, stick to one, right? In that asset class, what thing are you going to trade? What pair are you going to trade? What stock are you going to trade? Again, stick to a couple, 1 to 2 maximum. You'll notice, guys, that I keep on telling you to stick to less. In trading, less is more. That is something we will also be going over later on. But how much are you going to be risking per trade? What is the dollar amount? What's your stop loss? Stuff along those lines. All these things are going to be very important. The reason for this is because your risk is something that you can control. I can't control how much money I'm going to make. I don't know if the trade is going to hit my profit. I don't know if the trade is going to take me out at break even. But what I do know is I know how much money I'm willing to lose on a trade. I know what my stop loss is going to be. I know exactly how much money, if I was to lose, I would lose. That is what you can control. This is why it's so important. You cannot control how much money you make, guys, but you can control how much money you will potentially lose. All right. That's the only thing we as traders know. If I'm entering a trade, I have no idea how much money I can make. The trade can go and make 50x my money, or it can make nothing. I don't know that. I don't know what the market's going to do. However, what I do know is if price reaches a certain level, this is how much money I'm going to lose. And the reason it's so important is because if you're losing too much money, that's when you start to make mistakes. And of course, you don't want to lose too much money, because if you lose too much money, well, there goes your trading account. Now you can't trade anymore. All right. So it is something that you have to think about, and it's very important because of that reason. Risk management is going to be something that helps you keep your account for the long run. Guys, trading is very difficult. All right. And sometimes you're going to go on losing streaks. I can do everything right and still lose 5 trades in a row. And you, if you don't believe me, trust me, at one point or another, you're going to be following your strategy to the T and you'll still lose 5 trades in a row. Trading is a game of probabilities, which means you can lose a lot of money. Your whole point of trading is to not lose a lot of money. It's to make a lot of money. So risk management is going to help you with that. It's going to help you not lose so much money and survive the drawdown, survive the losing streaks. That way, when you get into the winning streaks, when you start winning, you can make money and you can protect your account and still be trading. You can still survive. That's the whole point of risk management. We're going to go over some risk management calculators really quickly for you guys. I'll be going over these more in detail again later on. So here's the first one. This is my FX books forex position size calculator. Literally, if you guys want to access this, if you're trading forex, just type in forex position size calculator, my FX book. Simple as that. This is one of the best risk management calculators. Honestly, guys, if you're trading forex, just use this. This is all you need to manage your risk properly. And I'm going to go over how you actually do that. So let's say we're trading Euro USD. Well, first of all, you'd select the pair, right? So like, I don't know, let's say we're trading like GBP USD, right? What's your account currency in? You'll notice it has a different currency. I'm going to select it to US dollars because I trade off that. And a lot of you guys watching this are probably in US dollar. Now what you're doing is you're going to select your account size. Let's say you're trading with $1,000. What's your risk percentage? Risk ratio pretty much means how much of the account are you willing to risk per trade? Now you notice I'm not going to say 50. I'm not going to say 5. I'm going to say 1. Uno. That should be the maximum you're trading with. Maximum you're trading with. Notice how I said maximum, not minimum. The maximum amount you should be trading with is 1% of your risk, or 1% of your account risk per trade. So if you can do basic math, you have $1,000, okay, and you're risking 1%, which means if you were to lose a trade, you are going to lose $10. And you guys might be like, well, that's not a lot of money. Doesn't that mean that I'm also not going to make a lot of money? And you're right, you're not going to make a lot of money. But as a beginner day trader, you're not even going to make money at all because you have no idea what you're doing. That is the harsh reality. That is the truth. You are not special. You have no idea what you're doing. You are going to lose money. I wish someone was so blunt with me when I first started trading so I didn't waste money. But that is the truth. So completely listen to this advice. Lower your risk. Risk 1% of your account per trade maximum. Next, stop loss size. All right. So let's go into pips. So real quickly, guys, I'm going to switch over to the charts. Do not mind me. Oops, let's say you're on GBP USD. Sorry, guys, I forgot we were on that. Right. Cool. So let's say you're taking a trade, I don't know, over here. Let's say you take this trade and you want your stop loss to be over here, right? Let's say 11 pips. Okay. So that means you're going to go into this calculator. You're going to say, I'm trading GBP USD. I have $1,000 account. I want to risk 1% of my account per trade. My stop loss is 11 pips. Okay. The way you calculate pips is very simple. You just look at this number over here, the one right next to amount. You see, I literally can't point to it at the same exact time. Actually, maybe if I go like this. Like this? Yes. Okay. So you see this number that I'm circling right over here, the 11, that is how much pips you're at. Okay. That's what your stop loss is going to be. So now you press calculate, and the trade size, guys, lots, just leave it at that. It should be 1, and you're going to stay with 1. All right. And you'll notice it says 0.09 lots. So when you go into a MetaTrader 4 with your trading from, or whatever you're trading from, when it asks you for your position size, you're going to select 0.09. You're going to put that, and then you're going to enter your position. So if you're selling 0.01, right? Sorry, if you're selling GBP USD and you have an 11 pip stop loss size, and your account position size is 0.09, your lot size is 0.09, that means that if this trade was to hit stop loss, you would lose $10. Coincidentally, let's say if your trade is a 1-to-1 risk to reward ratio like this, right? So if your trade hits take profit, you would make $10. Okay, and again, that's not a lot of money, but you're not supposed to be caring about the money you make. You're supposed to learn the scale first. Okay, so hope that makes sense. Let's go to a different example. Let's say you're taking your Euro JPY, for example, right? Now let's say you're taking a long position here and your stop loss is 25 pips. Okay, so we're gonna go back to the account and do the same thing, right? So what pair are you trading? You're trading Euro JPY, correct? So you're gonna select Euro JPY. Now your stop loss is going to be 25 pips. Okay, cool. And then you're going to calculate, and now it says 0.06 lots. So you'll notice that the lot size is different, and it's different for a variety of reasons. It's different because your stop loss is different, but right, your stop loss is much bigger now, but also because the pair you're trading is different. That is very, very important here. So now, if this trade was to hit stop loss, you'd still be losing $10. This is the whole point, guys. No matter what pair you're trading, no matter what your stop loss size is, your risk per trade, the dollar amount is going to be the same. That is the entire point. So you don't lose too much money. Now, coincidentally, guys, look at what happens over here. If we go from 25 pips to 10 pips, what happens? 0.14 lots. Okay, so the lot size might be bigger, but now your stop loss is smaller. That means that you're still going to be losing $10 per trade, because lot size and stop loss are inversely correlated. When your lot size gets higher, your stop loss should be getting lower. And on the flip side, when your stop loss goes higher, your lot size goes lower. All right. Hopefully that makes sense. Whew. All right. Now let's go on to futures. Dang it. I wish I could have wish I added a link to it, but I guess I didn't. Right? Cool. This is another risk management calculator. I kind of was playing around with it before as well. So let's say you have $1,000 account size, you're trading M and Q, right? And you want to risk 2% of your account per trade, right? Entry, stop loss, etc., sell position. Now you notice, guys, if I take 2 contracts, right, what can happen? I'm risking 7.2% of my account per trade. That is way too much. You do not want to be risking 7% of your account. So let's say I click this now, and now it says you risk 0% of your account, because you literally cannot risk 2% of your account per trade trading with this stop loss size, right? You're going to be risking way too much amount of money. So this means that I have to either increase my risk to, let's say, 3%. Okay, I guess I still can't. Let's say 4%. All right, so yeah. So, and then I can trade, or I have to increase my account balance and decrease the amount of risk percentage as well. And now I can trade. And again, guys, you'll notice that at one point or another, this turns from green to red. And that means you're risking way too much money per trade. So maybe if you're trying to take a trade, guys, and you realize that, oh, I can't risk, like if you're trading futures and you're like, I'm risking way too much money on my account per trade, that's probably a sign that you shouldn't be taking that trade. If you can't manage that risk, if you can't control your risk, because that means the trade is too risky. So you shouldn't be in that trade. So whether you're trading forex, futures, stocks, guys, use a risk management calculator and only keep your risk to 1% of your account per trade, right? So you say this is 1.8%. That means that I should be, oh, well, I actually selected 1%, 2% risk, but select 1% and you realize you can't do it. That means the trade is too risky. Don't take that trade, right? Simple as that. Next, trading psychology. So trading psychology, guys, is the most important. It's going to account for 80% of trading, a lot of people say, and it makes a lot of sense. I kind of agree with that, guys. Trading psychology is pretty much your ability to follow your strategy, right? So it's going to be you executing properly, you not taking trades when you're not supposed to, not revenge trading. Revenge trading means when you lose a trade and you try to make that loss back, right? That sort of stuff, following the risk management protocol. We talked about that, right? With position sizing, with how many pairs you're going to trade, right? And again, all these other things as well. This is a very good infographic, right? We have nervousness, we have overconfidence, fear, greed, anxiety, FOMO, doubt. These are all of the things you will face when you're trading. And it's kind of crazy because you're going to face them within seconds of each other. So you're going to enter a trade and you're going to be incredibly confident with this trade. And you're going to be like, I'm going to make a gazillion dollars off this trade. And then it's going to reverse on you. It's going to pull back a little bit. And then you're going to get fear, right? You're going to start being scared. You're going to be anxious that you're going to lose the trade, right? It's very, very crazy how much how emotional we can be as day traders. And the whole point of trading psychology is to master your emotions. Now, keep in mind, guys, as a trader, you're always going to feel emotions. There's just no if, ands, or buts about it. It's just the truth, right? The point is to not let yourself act on those emotions. The easiest way to do this, guys, is going to be just trading. This is something that you really can't master. You're just going to have to practice that a little bit more and just trade more. And then eventually you will get better at it. And it sucks because this is the most important thing. But this is probably what's going to be the difference between you being profitable and you being not profitable. Because everything is related to this. You following your strategy, you managing your risk, you entering when you're supposed to, you not closing trades when you're supposed to, literally everything. And like I said before, we will go over this more when the time comes. Now, final and foremost, guys, this is going to be your trading plan. It's your trading checklist. It pretty much tells you exactly what to do and what not to do. Now, developing your trading plan, guys, might be a little bit difficult because it's going to require strategy, risk management, trading psychology, etc. And so it might not be something that you guys are ready for now. Or on the flip side, some of you guys might actually already have your trading plan. Now, the best thing I can tell you guys is to print this out. Okay, that way, give me 1 second, guys. Okay, guys, so I'm back. So yeah, here's an example of a trading plan, guys. You'll notice that it's talking about the time frame that you want to trade in, right? The market, what exact market are you trading, how you're going to enter, where is your stop going to be, how you're targeting things, what type of condition, what market condition are you trading in, what's your risk management protocol, literally everything. This is exactly the type of trading plan that you want to develop. And the point is to print this trading plan out. That way, when you're in front of the markets, guys, as a beginner trader, everyone faces this. I used to face this myself. It is very difficult to know whether or not you're doing something right when the charts are in front of you and you have to make decisions quickly. By printing out your trading plan, you can literally physically look, right, and see, did this happen? Did this happen? Did this happen? Is everything meeting my requirements? And then you can take the trade if it does. And if it doesn't, then you don't take the trade. It's as simple as that. That's the whole point, guys, of developing a trading plan. Okay, and that's the point of printing it out, because when you're trading in real life, it's going to be very difficult to know whether or not you should be taking a trade or not, right? As a beginner, you're going to fear FOMO, right? You want to get into the trades even though you shouldn't, right? You might be not confident as a trader, right? So you may not want to get into trades when you should be getting into trade. Everything can happen to you guys. You definitely need to print out your trading plan. That way it's completely objective, right? You know for a fact that everything meets your trading plan, you should get in. Or everything doesn't meet your trading plan and you shouldn't get in, all right? So now, very quickly, guys, we're going to be going to TradingView. We're going to be going over some basics of TradingView, all right? How to use it, just so you guys can figure out. What the heck is this? All right, anyways, how to use this so you guys can figure out, what to do, just so when you're trading, you can analyze charts if you're a complete beginner. So over here, guys, you're going to have the pair you want to trade, right? So if you want to trade GBP, JPY, you can click that, type it out, it'll show up, right? If you're trading a stock like Apple, you can also click that and it'll show up eventually. Bam. All right. These are the time frames you're going to want to trade from. I have a bunch of time frames marked out, even though I don't really use a lot of these. But yeah, some of these you won't be able to trade from unless you have higher tier memberships from TradingView, like the seconds chart. I don't even have this one, so you'll notice it's gonna ban me from taking it, right? So anything that you can access, guys, it'll tell you, so you don't have to worry about accidentally accessing it and then paying for it eventually. But that's the time frames, guys. Eventually, you want to be able to shift through the time frames to analyze the charts. We'll go over that. You can set alerts as well, guys. So let's say, for example, you want to be taking price when price reaches here. You want to be looking at the chart. You set the alert. This is really good, guys. As a beginner, a lot of times I will highly recommend you guys use alerts because you're not going to want to stare at the charts. That's going to cause you to do things that you shouldn't be doing, right? So definitely use alerts. We'll go into, again, how to use them later on. Here's all the indicators, guys. As a beginner, a lot of you guys will probably be wanting to use indicators. So you can type in like EMA and it'll show up and it'll be an exponential moving average. You can also favorite them. So whichever indicator you want to show up, it'll actually show up right away on the top. And bam, right? This is probably not exactly how yours is going to look. I have mine set default to this for a specific reason, and we'll go over this exact setting in the free course. So stay tuned. But yeah, your indicators will show up. You can edit the settings right over here, right? You can change the color. If I want to make mine red for whatever reason, I can. You can increase the thickness. You can put the length. So this can be a 20 period one. You'll notice it's going to change There's so much you can do, guys. It's very, very customizable with a bunch of indicators. So if you want any indicator, guys, you just have to go over here and then type it in. And you can, let's say you want to do a MACD, bam. TradingView has a lot of stock indicators as well. Then it has other indicators that people actually make up specifically for themselves and they share publicly for free. So you can use these as well. So I don't know what MACD leader is. I have no idea how to use this. I've never seen this before in my life, but this is a public one that's completely for free that you can use as well. All right. As for drawing tools, there's literally a bunch, right? We have these lines. These can be used for trading. Like, you have trend lines like this. If you don't know what they mean, don't worry. We're really going over that. Right? All of these are just analyzing tools. Like we have fib retracements. These are probably like a bunch of things that you guys have heard of before, and this is where you're going to access them. Everything on the left is going to be things that will help you analyze the charts and your drawing tools and everything, right? So you want your risk management projections, right? Long, short, exactly. I'll make a specific video for TradingView specifically, but yeah, on top of that, you can always just star things. So here's your favorite bar right over here. You can hide or deselect it. And then when you add things, all you have to do is click the star and then it comes to your favorite bar. That way you don't have to continuously go and select it from the left side or the left panel. You can literally just go directly to the favorite bar. And it's actually very useful. I use it pretty much every single day. And if you want to deselect, again, you just click the star again, it shows off. But these are the things that I like to use, guys. I have trend lines over here. I don't really use trend lines as much, actually. I like the arrows for when I'm making videos so I can point to things, right? I have boxes for key levels like this. It helps a lot, guys. It's very, very easy. I suggest you guys go through TradingView, play around with it, see exactly what you want to use, what exactly you don't like to use, and go from there, really, right? And just go from there, see what you like, add them to the selection bar, the favorite bar, and then select from there and just analyze charts with that. Play around with it, guys. A lot of the things you'll understand, a lot of things you won't understand until you actually use it, right? I can explain to you exactly what to do, exactly how to do it, but until you guys actually get practice, actually get experience doing it, it's literally not going to matter. It's not going to help at all. So I can explain everything for you, but the easiest way that you're going to learn is to actually trade. And that's the whole point of me actually making this day trading basics chart. I could have just started without this, but the whole point is to give you guys a rough idea of what's important so you guys can do your own research as well. And when you're actually trading, you can look at your own things that you want to look at, try your own things with TradingView, and that way when you come into this course, you have some sort of idea of what I'm talking about, and you can see like, hey, I recognize this. Hey, I learned about this from here. I learned about this, or I noticed this when I was trading by myself. Oh, now he's explaining it this way. Maybe I should take that into my notes. That's the whole point of this, right? So that's it for this video, guys. This goes over day trading basics. The next part about this course is going to be probably going over TradingView specifically, as well as an introduction to technical analysis. So I'm going to get into everything in technical analysis: candlestick charts, patterns, market structure, price action, indicators, key levels, support and resistance, supply and demand, liquidity, literally everything, guys. That being said, guys, that's it for this video, guys. Hope you guys enjoyed. Like the video, comment down below, subscribe to the channel. Peace out. Assalamu alaikum. Allah Hafiz.